In this video, I'm sharing my 9 simple filters I use to filter out the bad trades and find the very best ones. So if you struggle with consistency and you want a simple checklist to use as you're trading to make sure that you're on the right path, then this is the video for you. So if we haven't met yet, my name is Justin Bennett, forex trader since 2007, full-time trader since 2011. And as always, all of this is my opinion only and not financial advice. So looking at the EURUSD 1 hour time frame, this is my time frame of choice when I'm identifying market structure and looking for trends in the market. So this is where I like to start. And in this video, we are going to go through the 9 filters here one by one. So we're going to write this out as we go along. If this sounds overwhelming though, don't worry, because a lot of these are going to be very simple filters that you can answer within seconds. And also the fact that we are going through this as the market progresses, we're not necessarily answering these filters, okay, right before the trade. So you're going to have this information before the trade setup even comes to you. Okay, so looking at the EURUSD here on the 1 hour time frame, obviously a very choppy market right here. And this was also around the holidays, so that's why we are seeing a lot of chop here. But with that said, you can see that we do still have a nice structure here with this low back here being our external low. If we move this over, this was our change of character. Okay, so just to kind of label this out, because I know you guys love to see this. I know the break of structure and change of character are a couple of concepts that really trip traders up. So I'm going to spend some time on this here going through this. So this up here was our break of structure. Okay, so the close above the high, we need a candle close above here. We got that right here on this candle. That means that this down here was our external low or protected low. You can also see where on the way up, we had this internal low that formed and we swept that low. We then had the BOS. So this right here is a perfect BOS into a change of character. And that told us that once we had this close right over here, that I was only looking for shorts. Okay, so shorts only from this candle here on out. And if we move this forward, you can see again, very choppy through here. This would be market conditions that I really wouldn't be interested in. I want to see a little bit more of a swing in the market before I start trading. And you can see that over here, okay, if I play this forward, you can see that on this low right here, we did get a close below this low. So because we had a change of character over here, this now becomes our BOS, okay? So our bearish break of structure. So the structure that we're breaking here is this right here, okay? The fact that we were going sideways through here after this change of character, and now we are breaking down again, proving or showing that sellers remain in control. So this is going to be the first filter that I use, okay? So the first filter that I use whenever I'm trading, and this helps me to avoid being on the wrong side of the market. This isn't necessarily a filter in terms of filtering out bad trades. This is more just allowing me to understand who is in control and telling me whether I want to be buying or selling. So the very first filter is going to be higher time frame structure, okay? And by higher time frame, again, I prefer the 1 hour because I do like dropping to a 5 minute for that confirmation. So for me, the 1 hour is where it's at in terms of the structure. Okay, so let's play this forward here and see what we get from the euro. Now, we do continue lower here a little bit, and you can see where we did get the market retracing into this area. But I want to show you something here on the 15-minute time frame. So if we go to the 15 here on the EURUSD, you can see that this move right here did mitigate some of the imbalances that we saw through here. But one issue that I have with this is that, first of all, if we take a look at our external high up here, so this was our break of structure, and that means that within this box, if we just draw a box around this, right, this is a simple way to find your external high. This right here is the external high that occurred before the BOS down here. Now, we also know that once the market starts to rebound, this becomes our low. So that helps us a lot, because what we can do here is we can draw out our OTE, or premium and discount too. So looking here, high to low, you can see where we did get the market tapping into OTE. Okay, now anybody shorting this, anybody looking for a low time frame flip here, obviously this would have worked out. You can see we got the move into OTE here and the return to the lows. So this right here wouldn't have been a failed trade, okay, because again, it is with the trend and we did get the return to the lows. Okay, now the one that I want to show you though is going to be this move up here. Now the reason that we saw the market come up here once again is if you look back here to the left, okay, always look to the left and ask yourself, where is the liquidity? So on this move lower, what we can see is that right here within OTE, what do we have up here? We have this imbalance through here. So this is ideally the one that I want to see the market come back and retest or mitigate. So if I move out here and show you how this looks in context to where the market is right now, again, you can see that this was the imbalance right back here, and this was that first move up. And then we have this imbalance back here, which is well within OTE this darker green area, which you can see we are mitigating right here. Okay, so this right here is going to be the next filter. So my first filter is going to be structure. My second filter for any trade is going to be area. Okay, so I'm going to call this area slash location. So the location on the chart, first of all, I need to be shorting high. If I'm looking for shorts within a downtrend like this, I'm not going to be shorting the lows, which is why I cannot short and discount this red area down here. We have to be up here in premium. And specifically, I love to see the market come back here into OTE, which is the area between the 62% and 79% retracement. Okay, so that is going to be my second filter. Okay, so once we have the market back in here, we have the second filter met. Okay, so again, this is going to be our OTE right through here. And from here, what I can do is drop to a 5-minute time frame. All right, now before I do this, I'm going to come up here and update our list here because on my third filter is going to be a low time frame entry trigger. Okay, or we can call it confirmation trigger, whatever you want to call it. But basically what I need to see here is a market shift on the 5-minute time frame now that we're in OTE here that is going to tell me that even though we have the 1-hour downtrend, if you'll notice here on the 5-minute time frame, we have the market in an uptrend. So we have higher highs and higher lows. So what I need to see here is I need to see a shift telling me that buyers are exhausted and sellers are taking over control once again. Because otherwise, there's no way for me to have any confidence in the fact that this is going to rotate lower. For all I know, this market could just continue turning higher and come up here and take out this high and then reverse. Okay, so I need to see that lower time frame trigger. Plus, what that's going to do is once I see the market give me that low time frame shift on the 5-minute, it's going to give me an area where I can essentially hide my stop loss. So the way that looks is this. You can see that we're in OTE, so now I start looking for my low time frame shift. And what you'll notice here is that once again, off this high up here, we have a BOS, okay? So break of structure above this high. So that's our BOS right there. And this low down here is now going to be the one that I'm watching. So this is now our protected low within this 5-minute trend. Okay, so if we play this forward now, you can see we did get the confirmation right here on this close. Now in this case, we do have imbalances up here. However, in my experience, a lot of times with moves like this here, you will not always get the market coming back here. In fact, about 50% of the time, you might not get the market moving back here within this area. Now, if you're going to wait for the market to come back here in this area before you short, then you have to understand that yes, you're going to get a better risk reward. However, at the same time, you're also going to miss out on a lot of trades. So one thing that you can do here is you can potentially just enter with a half size position or a partial size position down here on this close on this confirmation, because this is what gave us our change of character. Okay, so the close below here gave us the change of character, which means this is now confirmed. This is my entry trigger on the low time frames. Okay, so what I can do is enter with a partial position here with a stop loss above the highs. Now I like to give myself a little bit of a buffer. I don't like putting it right at the high. I like giving myself at least, maybe half a pip or 1 pip or so above that high, just in case we do come up here and wick that high. Okay, and this is with the idea that if we were to see the market come back here in this area, then I could essentially add to this position, knowing that my risk would still be under control, because then that would be my full size position. Okay, so let's move this forward now and see what we get. So we have our entry trigger down here. Now, actually, before I do that too, I'm going to draw this or drag this down here to the lows, because this is going to be my logical target. Okay. Now, this is my next filter, because for me, I need to have at least a 3-to-1 reward to risk. So in other words, we represent that by saying 3R. Okay. So what that means is that, again, my reward is going to be 3 times my risk. If I'm risking 20 pips, my reward has to be 60 pips or better. Okay. Or if I'm risking, $1,000, I have to be making at least $3,000 or more. Okay. So in this case, from our entry here, up here to our stop loss above that high, you can see that this right here is about a 4.2 R or so, or maybe about a 4.3, meaning that my reward is 4.3 times my risk. Okay, so that's well above my 3R minimum. Okay, so if we play this forward now, let's go ahead and see what we get here. Okay, so that's going to be my next filter up here. Number 4 is going to be a favorable risk reward ratio, which we can also call risk quality. Okay, so what that means is for the risk that I'm taking on this trade, whether it be $1,000 or $3,000, $5,000, whatever it might be, is the quality there? Am I risking an amount where I stand to gain at least 3 times that amount? And in this case, the answer is yes. Okay, so this filter now tells me that this trade right here matches my rules. Okay, matches my filter. And if this were something like this here, where I'm only going to get a 1.5 or 2, then that's not going to cut it. I need to see at least a 3R minimum, okay, where that reward is 3 times my risk, okay? So that's my next filter there. And my fifth filter, okay, before we play this forward, my fifth filter here is going to be the path to target. Now, what does this mean? It means that you don't just want to squeeze out a 3-to-1 reward to risk. So what tends to happen is when I say that my minimum is a 3R, what tends to happen is traders will come in here, and let's say that your stop loss was, up here, right? And what traders will start to do is they will start to target lows, way back here in the market to justify the reward to risk ratio, right? So what tends to happen is they start to target lows in this case that don't make sense. And that is the worst thing that you can do, because now you're just basically form fitting things so that you can take the trade, but there's no point in having a filter there if you're just going to form fit it to whatever you need, right? So the point here is that my path to target is wide open. There's nothing here on this chart. We have a downtrend in place. There's nothing here on this chart that tells me that this is an unrealistic place to target. We have these lows back here. We have the downtrend in place. We have the market coming into OTE. We also have that 5-minute shift up here. So there's nothing here telling me that my target being these lows down here is unreasonable. So the path to target is wide open. Okay. So that's my next filter. Okay. So coming back up here, path to filter is my next one. Now, my very next filter, and this is a quick check. Again, we're doing all this very quickly, is going to be high impact news. Okay. Is there any high impact news within the next 24 hours, especially the next few hours? I mean, look, if it's a Wednesday and there's FOMC coming up, I'm not going to take a trade on the euro, because that would just be absolute suicide. Even if I got the direction right, I know that markets are going to get volatile. I know the spreads are going to widen. So it's just a bad idea to trade ahead of events like that. Even non-farm payroll, things like that, I'm not going to trade ahead of those events. So that is the filter that I have that says if there's high impact news within the next few hours, I am not going to take the trade. If it's 24 hours or more in advance, then I'll take the trade, because what can often happen, even if it's, 20 hours in advance, what can happen is the market can move in my favor enough to the point where I can take off some of the trade before that event, move my stop loss to protect my risk, and still be okay, even though we do have that event coming up. But again, if there's going to be high impact news in the next few hours, then I am not going to trade. Okay, now the very next thing that I want to ask myself here, going back to the hourly time frame, let's take a look at this here. And I'm going to show you guys another example after this one too, just to really hit this home. But this right here is going to be my next filter. So the next filter is going to be the time and trade expectation. Okay, so we're going to say time and trade expectation. Now, this is a big one. This might seem minor, but this is a huge one, because how many times have you taken a trade and the market runs in your favor a little bit and then it starts chopping around, and when it doesn't hit your target within the first few hours, you pull the trade and move on to something else, we call it shiny object syndrome, right? And you come back the next day or maybe 2 days later and you see that the market would have hit your target. Okay. It happens all the time. And if that's happening to you, then leave your comment below and let me know. But it happens all the time where we tend to get into these trades and we have these unrealistic expectations of what is supposed to happen. Okay. So in this case, when I'm looking at this on the hourly time frame, right, what I can see here is that what I often do is within a trend like this, I'll take the last high to the low and I'll measure this out. And I'll say, okay, to this first low here, it was about, let's say 24 hours, right? Just over 24 hours. Now, if I do the same thing here from this high up here, down here to the second low, it was about 33 hours. So I know in this case that from high to low, that it could take a day, maybe longer, for this to play out. So I'm not going to be expecting the market to come down here to these lows within the next few hours. It could, okay, but it's in terms of this time and trade expectation, okay, this filter that I have. I'm not looking at this market saying, okay, if we don't hit my target within the next few hours, then this is going to be a failed trade and I'm moving on, because that just wouldn't make any sense, right? The expectation here is that it could take a day, maybe even longer, for it to come down here and hit these lows. Okay, so with that in mind, I'm going to move this out a little bit here to give myself a little bit of a cushion. Okay, and the next two filters I have too, and these are, again, very, very fast. This one here is going to be my emotional state. Now, this is something that I ask myself technically at the start of every day. If, I'm not feeling well, like I was recently sick, if I'm not feeling well, then I'm not going to trade that day. If I got, 2 hours of sleep or 4 hours of sleep and I'm really, really tired, I'm not going to trade that day. We have a son he's 2 years old. If he hasn't been sleeping well that week and I had a night where I got, a few hours of sleep and I'm really tired, I'm not going to trade that day. Okay. It doesn't happen often, but it is important to understand that, what is your emotional state? Are you tired? Are you feeling sick? Are you angry? Are you frustrated? Are you trying to make your money back in the market? All of these are things to be aware of before you trade. Okay. And then number 9, last but not least, is going to be our clarity/sanity check. Now, what does this mean? It means that I need to be able to explain what I'm doing here in the market in one simple sentence or less. Okay. So if it takes me a whole paragraph to explain what I'm doing, then I'm completely overcomplicating things. And this is a good practice for you. If you have, 7 different indicators going on and all these different filters and checklists and everything else, if you can explain what you're doing in one simple sentence, then you are severely overcomplicating trading. So in this case, what I can say is that we have a downtrend in place, right? We have a downtrend here based on this change of character, the market moving back here to mitigate imbalances into OTE and a lower time frame trigger with a favorable risk reward ratio, right? Very, very simple. Okay. One simple sentence that explains exactly what I'm doing here. And this is the case every time for me because I'm doing basically the same exact thing every time in the markets. I have this checklist in place and I'm doing the exact same thing every single week. Okay, so these are my filters, guys. Those are the 9 filters, and let's go ahead and play this forward. And again, I'm going to run you through another example next here. Now, what you'll see is that I just said, I'm not going to expect the market to come down here and hit my target within the next few hours, and that's exactly what it did. Okay, but again, if the market had just done this, right, moved lower, came over here, came back up, went sideways, and just done this over the next, 24 hours or so, then I'm not going to be over here in this area going, oh man, I'm going to move on because this isn't working out. Because I know from this leg down here that this could take 24 hours or maybe just a little bit more. Okay. So in this case, guys, happy days. We got the market coming down here to our target within just a few hours. So no need to wait for a long time for that one. Okay. So I'm going to remove this OTE here just to kind of keep things nice and clean. And we're going to play this forward now and take a look at another example. So we're running through the exact same filter. Okay. So same exact checklist, call it a filter checklist, whatever you want to call it. We're doing the exact same thing here now with this. Okay. And you can see where we got a really big move back up after we swept this low down here, but we were already out of the trade. So we didn't care about that. And even if we did, still the market moved lower. Okay. So as soon as we get this right here, right, we know that we have now a break of structure. Okay, so off this low down here, you can see across here, we didn't break below it here. However, we did on this candle. So right there is our change of character. Okay, so again, just going through our filter, high time frame structure, we know sellers are still in control. Now we're looking for an area. So we're looking for an area to look for shorts. And I'm going to change this here. This should be a BOS. Okay, so moving forward now, as soon as we get the market bouncing here, what we can start to do is we can locate now our external high and low. So in this case, you can see that from this high up here, again, all we have to do here to find the high within this structure is draw a box. Okay, draw a box up here like this. What's the highest point? It's this up here. Okay, so from here, what I'm going to do is I'm going to get rid of these labels right through here just to keep it nice and clean so you can see what I'm doing. So off of this high up here, we're going to do the exact same thing. We're going to draw our OTE out over here to find where premium and discount are. So down here, this is discount. This is where I cannot short. I'm looking for shorts up here in this area, specifically the OTE, this dark green area. Now, furthermore, what you'll also notice is that if you look over here, okay, on this move lower, what you'll notice is that these candles right here, so all of these candles, these are imbalances in the market, okay, specifically up here in this region. Okay, so that's important to recognize and understand because when you have imbalances like this lining up with OTE within a trend like this, that is exactly what you want to pay attention to. Okay, so let's run this forward now and see what we get. So right there, we get the market coming up here into this region. Now from here, what I'm going to do is same exact thing. Okay, wash, rinse, repeat, guys. It's the same exact process every single time. And that's what makes your trading mechanical. That's what helps to remove the emotions from your trading is that you're just literally doing the same thing every single day. Okay. So what we're seeing now is the same, pretty much the same pattern that we just got before. Okay. And again, this is the same exact thing right here in OTE, perfect retracement into OTE. And what you're going to notice is that off of this high up here, we got a break of structure. So we had the market actually close above this high up here, giving us that confirmed BOS. Okay. Now, as soon as we have that, we know that this low down here, once again, if you draw the box within this window, okay, so from this BOS down here to the low, draw your box here. What is our lowest point? Right down here. So that is going to be the low now that buyers have to protect. So this down here is our protected or external low. Okay, so from right here, you can see we didn't close below it there. However, we did right here on this candle. Okay, so we're going to label this our change of character. And once again, the same exact process. What I'm doing here now is I'm looking for, this is my trigger, this close right below here. Okay, so we got the close below giving us that confirmed change of character. This is my low time frame trigger. So once again, we have a 1 hour downtrend in place. We have the market snapping back into OTE. We also have it filling in this imbalance from back here. Okay, so let's circle back now to our filters and make sure that we're on track here. Okay, so we have the low time frame trigger. We've checked that off, right? Check, check, check. Now, number 4 is going to be the risk quality. So for that, we need to come in here with our tool, our short tool, and draw this on here to make sure that whatever we're shorting is going to have that risk quality. In other words, that the reward is going to be at least 3 times my risk. So for that, once again, all we're doing here is we're moving the stop loss above the high up here, okay, giving myself a little bit of a cushion, and I'm just dragging from this entry. So this would be the entry right here. Again, whether you take a partial, entry here, waiting for a move up here. However, what you will notice is that unlike last time, you can see these highs right here. We didn't get a straight shot down. So there's really not a lot in terms of imbalances up here or in terms of liquidity that the market may want to come up here and tag. Okay. So in this case, you could, I would go in here with a full size position, stop loss above the highs. And then my target, of course, in this case, would be the low down here. Okay. So if we look at this here now, if we take our stop loss and move it down here, let's make sure that we're on that candle that broke down. Okay, and you can see that right there we are. Now, in this case, what you'll notice here is that we aren't quite at a 3R. And this is going to be a decision that you'll have to make when you're trading, because you will have cases like this where if you have a 3R minimum where your reward has to be 3 times your risk, in this case here, you can see where it's a 2.78. Okay, so essentially a 2.8, meaning that my reward is 2.8 times my risk. Now, in this case, I have to decide, is that worth it, right? And in this case, if I'm at 2.8, right, out of a 3R minimum, for me, that's going to be enough. Okay, yes, it's not 3R exactly. If this were 2.5, then that's not going to be enough, even at 2.6. But if we're kind of over that like 2.75 area into that 2.8 area, I'm not going to miss out on a trade just because we're at 2.8 and not 3. Okay. So this would be a case where I would take this, even though we're not exactly at that 3R minimum. Okay. So I give myself a little bit of wiggle room there with that reward to risk ratio. Okay. So risk quality checks out. Path to target. Is this an unreasonable target? Is it unreasonable to target this low down here? In fact, it's not. And you can even see that on this move up, right, even off of this move lower, we have this imbalance down here. So this is not unreasonable at all because we do have the downtrend in place and we have this imbalance back here. And there's nothing obstructing this low. I'm not targeting something way back here in the market, right? That's actually, a ridiculous target to have. This is a very reasonable target. So the path to target is wide open. So that checks out. And, high impact news, right? Obviously, this is going to depend on the time. If there's no non-farm payroll or FOMC going on or any kind of rate decisions, then I'm good to go there. Okay, now let's go back to the hourly time frame and talk about time in trade expectations. So once again, we have more data now to work with because back here, what you can see is that from this high up here, okay, so this was the one we looked at, from this high down here to the lows, we talked about this, how it was just over 24 hours. Now we have more data to work with that can help us come up with an expectation of what we should be looking at with this trade, okay? So from this high up here, this external high down here to this low, we can see that once again, it was about 34 hours. So just over 1 day or about a day and a half. So for this, if I know I'm over here, right, at about, this point right here, this candle, okay, I'm going to move this all the way over here, okay? And not because it is going to take that long, but because I know that from this over here, okay, again, from this high up here down here to the low, we can see that this was about 34, 35 hours, okay? So I'm not going to get in this trade expecting what we got last time. Obviously, it would be great if the market just did this again and came down here and hit my target within hours, but it doesn't mean that the market is going to do that or even that I should be expecting it, okay? So that's going to help me a ton because again, if the market doesn't run right to my target, that's okay. I know that based on this trend, from high to low, it's taking a day, maybe a day and a half. Okay, so let's play this forward now. And again, the other checklist here, very quickly, we have emotional state. How am I feeling? Am I sick? Am I well rested? Am I feeling good? Am I frustrated? Am I trying to win my money back? As long as all those things check out and I'm good to go and I'm feeling good, I'm well rested, and I'm not trying to win my money back, then I'm good to go there. Clarity, sanity check, we know that's going to check out because it's the same exact process that we used last time. So very simple to explain. There's nothing overly complicated about this. Okay, so moving forward now, we can see the market hit my target right there. So right about at the same exact point where we'd expect based on this recent trend. Okay, so really, really nice stuff there. And you can even see that, from this high up here, if we measure this out, so from high down here to the low, this right here was actually a little bit longer. Okay, it took basically 2 days, or even just over for the market to come down here. But again, if you're making 2.53 R on a trade, even if it takes 2 days to make that, that's still an incredible profit, because if you're risking even 0.5%, right, you're making over 1% profit within a couple of days. Obviously, if you're risking 1%, then you're going to make a little bit more, or in this case, right around 2.8% profit. Okay, so in this case too, let's go ahead and move this forward here, because I know, again, you guys love to see marking up these levels in terms of, BOS and change of character and all of that. So if we look at this now, the market did give us that break of structures. So we know that this is up here is going to be our external high or protected high. And in this case here, what you'll notice is that we came down here, did the exact same thing. Okay, had this lower high form, BOS down here as well. Okay, but you can see how I just used these simple filters up here, right? These 9 filters to give me the best chance of success. And this is going to help you whether you use these or just take a few of them and implement them in your trading. You can use this as a checklist before you enter trades. It's going to help you to filter out the bad trades and only take the best ones. So I truly hope this video has helped, and be sure to check out this video right here where I walk you through breakup structure and change of character in simple terms. And if you want my free SMC strategy that I use every single week, then check out the link in the description of this video. Until next time, trade well out there.